hope that everyone can hear me right now. Good morning, good afternoon, or good evening to everyone who has found the time to join us for this webinar, or I would rather call it just online session of SME Banking Coffee series. We decided together with Mastercard to launch this series of 3 webinars, which are dedicated especially, to the partnerships and how the partnerships can help the SMEs to better serve them from the position of the banks, and at the same time, how partnerships can be one of the answers to the current situation of COVID-19 that is all over the world, but at the same time, how different partnerships can solve even the issues or help in a time of crisis that SMEs are facing. We decided to call it SME Banking Coffee series because we believe that this is a kind of break time for all of you who found the time to join us. We are very happy that so many of you have registered to the webinar, and right now I can see that we have almost 50 people online, which is a tremendous achievement, and we are really glad, and hopefully we will make out of this a very active and quite a very good initiative online that all of you can not just listen, but at the same time proactively contribute later on during the discussion. So please feel free to take your coffee and rest for the upcoming 45 minutes or 40-minute session, because we have prepared for you a following agenda. As you can see in front of you, with a short introduction, which we are already closing right now, we will touch the very basic of the topic today, which is building partnerships in Latin American region on behalf of Mastercard, especially how these partnerships can simplify the SME business. We'll present, or directly our guests will present you a case study, how Mastercard and Mo Technologies have built one of the partnership directly in the region, and how they're helping SMEs and at the same time banking institutions to serve better their SME clients. And later on, we have one additional special guest from or a former colleague from ING Bank Netherlands, who will share a couple of best practices on how, for example, ING or some other banks have applied the different types of partnerships as well as their institution to better target and serve the SME client. We'll obviously touch a bit as well the COVID-19 topic, especially how the partnerships can be an answer to better respond and help SMEs in a time of crisis. But I put it somewhere, below in the agenda, but obviously we'll be discussing it throughout the whole session. Now, without any further ado, let me very shortly introduce you the speakers that we have here with us today. So my name is Lucas. It's obvious I'm here always on behalf of ESMA, so I'll be just your guide today. But the experts that we have on the line, the first one is Daniel Acosta, who is the Vice President of Commercial Products in Latin America region and the Caribbean. So Daniel, welcome. We are happy to have you.
Thank you, Lucas.
Second speaker, but obviously I have had to introduce her first, so as ladies should go first. So Veronica Crisafulli from Colombia, who is a Chief Commercial Officer and co-founder of Mo Technologies.
Hi,
Veronica,
everyone.
Hi.
Thank you.
Very glad to have you as well. And the third guest, as I mentioned already, is Jack Demois, who is right now a senior SME banking expert and former area lead digital transformation and platform strategy at ING. Jack, I hope we can hear you as well. Jack, can you hear us?
Thank you for inviting me for this panel.
Wonderful. Okay. I'm glad that we have all the speakers online. So right now, without any further ado, Daniel, I'm passing the word to you, as the first 2 parts are dedicated especially to the big partnerships from the Mastercard point of view in Latin American region and as well Caribbean, and then about the partnerships, obviously, with Mo Technologies that you've built.
Thank you, Lucas. And good morning for those joining from Latin America, and good afternoon for those in Europe. Again, my name is Daniel Acosta. I'm the head of commercial products for Latin America, and I work in Mastercard. And today we're going to be speaking about how Mastercard and Mo Technologies are partnering to help financial financial institutions to improve the underwriting process of the SME segment and to drive the overall financial inclusion efforts in Latin America. So if we go to the following slide, basically, partnerships play an integral role in the Mastercard strategy. Before we go in detail on these partnerships, one of the main reasons partnerships are important for companies and for Mastercard overall is that by combining efforts, you will be to accelerate your competitive edge against your competition when you can bring partners that can have complementary solutions that can help solve for a problem. Obviously, you can also leverage resources from both companies to accelerate and innovate faster. You also have a way of growing your customer base, because if you have a company that reaches a segment or a target that you're going for and they offer complementary services, you have an opportunity to position your products and solutions with that customer base. And obviously, combining brain power to solve for complex challenges, it's also a thing that you can solve with when you look at partnerships. So today, as I was saying before, we're going to be discussing how Mastercard and Mode Technologies, which is a fintech that was founded in Colombia, are partnering to solve for an existing challenge. Can we go to the next slide, please? Okay, before we go into the actual use case of what we're trying to solve for, I also want to highlight the importance of choosing the right partner. Why? Because it's not that you just go out there and look for a company to partner without any guides. One of the things that we always ensure in Mastercard when we look for partners is that you have brand alignment, so to ensure that the partner shares the same or similar values of that of your company. And the culture from the companies are also similar, so you can interact better in those relationships. You also have to look for to ensure that the location where the partner is and the market that the partner also targets is within the same time zone, so you can also engage and execute partnerships flawlessly. And also to ensure that they share complementary products and solutions that you can blend together with the set of solutions to solve for a common problem that exists. But to go in detail and talk about this partnership in particular, I want to highlight first what is it that we were trying to solve for. So then we can talk to Veronica and talk a little bit in more detail of what Mode Technology does. But the challenge that we had in Mastercard in Latin America, and it's a common challenge that we see in other regions as well, is that we create great products and solutions for SMEs, but we also find that there is a gap in how the traditional financial institutions are lending to the SME segment. So we can go and deploy various innovative solutions when it comes to credit, but the fundamental problem that we have is that in Latin America, SMEs tend not to have a credit history with the credit bureau. They have cash flow challenges. They have high cost of financial products and the availability, which leads to SMEs having to struggle in how to access capital to run their business. Ultimately, what we find in the different markets is that most of the SMEs are having to use their personal products or their personal banking relationships to conduct business activities, and that gives them a challenge to separate finances, the personal finances from their business finances. So if we go to the following slide, another area that we saw that we want to solve for with these partnerships is the fact that financial institutions in Latin America today reject around 70% of from 70 to 75% of the total credit application coming from SMEs, and in particular is because they see the segment as a risky segment, as companies tend to be newer companies or companies that are making less money, so it becomes a little bit of a challenge for traditional banks to complete the underwriting process and also to have the risk appetite to lend to SMEs. So we saw a gap that exists in the industry, and is that banks or traditional banks use relatively antiquated systems to do the underwriting process of SMEs, and that results in a lot of credit applications being turned down, a lot of credit applications not being processed because there are perceptions that the cost to lend to SMEs or the underwriting process can be highly costly. So we saw an opportunity there, and we knew that Mastercard as a company doesn't focus, or we don't offer credit risk credit assessment tools or underwriting tools, and we knew that banks had these antiquated or old risk management platforms, and then is when Mo Technologies as a fintech, we saw that they were offering some great platforms and great services to help our issuers to improve the underwriting process, and also to deploy different processes to help those that don't have a credit bureau history in some of the markets access new ways of credit. So if we go to the following slide, I would like also to bring Veronica Crisafulli, who is the COO of Mo Technologies, to explain to us a little bit of what Mo does, what's the technology that they do, the market where they operate, and take us a little bit through this solution that we're partnering to offer in Latin America to financial institutions.
Hi, everyone. Thank you very much, Daniel. Thank you, FMI and Mastercard, to invite me to this webinar. So as Daniel was mentioning, Mo is a fintech with a patent pending proprietary technologies, and we use an innovative business model, and our focus is on democratizing the credit industry. Our objective is to work in partnership together with Mastercard and to help, as Danny was saying, all financial institutions and other companies using our complementary scoring model to evaluate the creditworthiness of clients. And when I talk about clients, here is important because we are talking about client with bancarized and not bancarized, with credit history and without credit history. We are tackling both final user and SME, and we are helping on the issuing and the acquiring side. What we do is that we use machine learning and artificial intelligence model, and all our infrastructure is lean and cloud-based. Our technologies is differentiating ourselves because we are using, number one, anonymous social demographic data. So just to give some example of this, gender, age, address, or just a zip code, and tenure with the client, with the financial institution, or with our partner. Second, we do use public variables. Mo is making like a big effort in collecting both macro and micro level variables, such as price per square meter, average salary, schools, country risk, FX, climate change in a specific zone. Third, we use credit behavior if it's available. If it's not, we start and use it once the client is starting to have a credit. Fourth, as a last point, we use transactional data. And when I talk about transactional data, I want to be very clear that it's not always, the card transaction data, but depending on the type of business we are tackling with our partner, it could be different type of data. Just to give you an example, when we work with using our technology for small merchants, we are looking to all the digital sales they were making, or all the orders that they do. And in some other cases, when we are going into like drivers, we're working like with independent workers, like drivers, we know all transaction for us is like the drives that they're doing on a daily basis. So all these inputs, let's imagine, that are getting into our deep learning model that correlates variables and calculates in second a lot of predictions, such as disposable income prediction, future sales prediction, bad debt, churn prediction. And what we use different risk profiles. So finally, we lead into a credit score. And this credit score could be a line of credit for a credit card, could be a credit for a debit or prepaid card, or could be an instant second authorization when a transaction is typically declined in the first place due to insufficient funds. So if we go one by one to the solution, so when we talk about the line of credit, as a key solution for small business. Here we are really helping financial institutions to increase the approval rate. So as Danny was mentioning before, like more than 70% of credit applications are declined. So here is where Mo enters, using an alternative and complementary model which use different inputs to really define and help to all these people that are declined at the first place from a traditional model to get into the path of credit with the first credit, and it could be a line of credit in the credit card. The second, when we provide loans onto a prepaid or debit account, here it's a new cash in into a product, and this makes the product is more profitable. And the third is like the instant loan for the declined transaction due to insufficient funds. And here what we're looking at in partnership is to really improve the customer experience by giving instant overdraft, and obviously improve as well the issuer economics. So I would say that to conclude, we are helping our partners to increase efficiencies in the end-to-end credit process. And here it's from digital onboarding. We also use open data variables to credit definition, and finally to manage all the credit. So we also instruct, typically we help the partner to instruct disbursement, collection, we make reporting and marketing campaigns. I just want to mention just a couple during this crisis, we have been asked to help even more in all the digital onboarding to avoid customers to go to branches. So here is just to create a better, seamless, automating and scalable process, and as well to better calculate a score. And in the last couple of minutes, I just want to mention two concrete examples of what we are doing with Mastercard during this crisis and how we are helping SME in this period. So number one, we are a technology provider to the government, to a municipality in Mexico. What we are doing here is that we are managing and we're handling the onboarding of the merchants. We use our model to define the credit amount that the municipality should give as a credit at 0% interest. We make the offer for the platform, and we instruct disbursement, and the disbursement is done into a Mastercard card. So this is just an example, and this is all small merchants that are really needed in this crisis to have access to credit, and the credit is given by the municipality. So here our role is the end-to-end process using the scoring, and on top of this, all our platform and technology to help the government to make the decision, and also we instruct the disbursement into a Mastercard card. The second example that I want to make is like that we are working with one of the largest CPGs, helping with a global platform using the credit score technology, a platform for the final merchant to authenticate, ask for the pre-approval of credit, and disburse, and help they instruct the disbursement onto a Mastercard product. And finally, we manage all the through the platform, all the reporting and the recollection as well. So this is in a few words what Mo does. And in the short and medium term, we have a plan with Mastercard to really help all the institutions into the end-to-end credit process, and supporting the users to actually start and improve into the path of credit.
Wonderful. Thank you so much, Veronica. Daniel, you want to add anything to, especially regarding the partnerships and regarding the delivery that you have in various countries in Latin America together with Mo Technologies on behalf of Mastercard?
Yeah, just to highlight that as many financial institutions will be probably wondering right now, this is a new platform. How do have the discussions with the risk management team around the platform. At the beginning, we were also thinking that would have been a challenge, but so far, in all the projects that we have engaged with Mode Technologies, the financial institutions have been seeing the value and the technology on the platform is convincing them that actually we have to look for additional ways of tackling the challenge to lend to SMEs, because if not, we understand that there are other fintechs that are going to have that appetite to go for this segment. So I just wanted to highlight the power on working together and between the traditional banking sector, fintech, and companies like Mastercard to make those basically initiatives possible. So that's just what I wanted to highlight, is that although it seems like a non-traditional models for banks to operate under, it has been well received so far in many markets across the region.
Yes.
So it's not. I just wanted to mention that it's not a concept per se. We're already deploying the partnership in several countries.
Yeah, I wanted to as well highlight that during the last webinar that we had a month ago together with your colleague Marcus O'Toole from Mastercard UK, he was presenting especially the partnership case that you've built with Visita in European market, but especially focusing on non-financial or beyond banking offerings, which is a great example right now that we have Latin American market, where we have a wonderful project that you built together with Mode Technologies in one of the core banking service directly, which is connected to underwriting procedure. So I think it's a great story, both actually to compare and to see that the partnerships can be built in any part of the SME banking service that banks are doing. Wonderful. Thank you so much, Veronica. Thank you so much as well, Daniel. We will definitely use you for the upcoming discussion at the same time. In the meantime, I would like to encourage all the participants that we have online. Please feel free to post your Q&As. We'll definitely ask them directly either to Daniel or to Veronica during the upcoming 20 minutes. But in the meantime, I'd like to pass the word to our next guest that I promised in the beginning. And it's good that we already had two of these online sessions. And as I mentioned, one, especially presenting the partnerships between Mastercard and Visita institution beyond banking offerings, and right now in more the core business. So Jack Demois, from as a former area lead digital transformation platform strategy at ING, I don't think we could have a better person as Jack was leading, especially the different partnerships on behalf of ING in SME segment or in business banking segment. So Jack, do we have you online?
Yes. Can you hear me?
Wonderful. Yes, we can hear you. There is a bit echo, but it's not a problem. So please feel free and go ahead, and we are really thrilled actually to hear a couple of best practices on how you have built a different partnerships with ING, both even could be beyond banking, but at the same time which are more connected to today's topic of underwriting.
Yeah, perfect. Well, let me start with my conclusion, and that's mainly in line, I think, with the former speakers, what they said. If someone else has a better solution, do not try to build it yourselves, but try to find a partnership approach. And that's, I think, what a lot of the banks in the past maybe did wrong. If they saw some nice opportunities, they tried to build it themselves. And that has not always been successful. So I completely share the conclusions of Mode Technologies and Mastercard, and I love this partnership that they've just presented. Let me first briefly introduce myself. I worked for 25 years in many roles in the SME segments in ING. I left recently and I am reorientating on new roles in the future. And in the meantime, I love to participate in these kinds of sessions as an advisor also to EFMA on banks. And I'm really passionate about SME banking and innovation. I think partnering with third parties is all about customer experience. How do you differentiate yourself as a bank? Since price, product, promotion, distribution, those are not really the real distinguishing factors anymore within banking. Everyone has a digital solution. Everyone is working on apps and in apps. So I think you cannot differentiate on those kinds of things anymore. So you need to find other ways to create a differentiating experience for your customer. And the word experience for me is always key in the things that I've did. How can you create the best customer experience for your customers? And by that customer experience, differentiate yourselves from others. So I think that's a new key to differentiating yourselves, is building partnerships. Well, Lucas already mentioned, let me mention one of the partnerships that I've been working on in my time with ING. And it also is related to the lending journey that the previous speakers just announced. I think that a lot of big banks struggle really with the small and medium business lending segment, let's say loans below 100,000 euros. How can you, at low operational cost, give customers a good loan? And talking about customer experience, not getting a loan from a bank, I can predict you, is not a good customer experience from the customer perspective. And I always give the example of my own father, who started the company 50 years ago, and he still remembers the name of the guy who denied his loan at that time. So 50 years later, he still remembers that bad customer experience. So what we try to do is we try to look at a partnership with a lending platform, how we can refer our customers to alternative lenders if ING Bank couldn't finance the loan. So we try to call the project, let's provide the customer an alternative yes instead of a no. So I think it's really important to see how you can improve that customer journey if you cannot provide a loan by yourself. What are a few learnings of mine in those kinds of roles is if you find a better solution outside your own solutions, try to partner with a third party. So in this case, we partnered with Funding Options, a British lending platform, who already had connections with multiple lenders in the alternative lending sector. And we try to refer our customers to that platform to find a good loan. And also within big banks, it's quite challenging if you want to create a partnership. So my advice would be to involve legal and compliance really early stage in when you enter up in these kinds of partnerships, because otherwise people are afraid to join into these partnerships and are afraid, for example, for cannibalization. And that's a word that you often hear within banks. If you start referring customers to partners, a lot of people say, yeah, but we should provide the loans ourselves, or we should do that business ourselves and not refer to a third party. So my third advice would be to really arrange sponsorship at an executive level if you want to partner with third parties as when you are a big bank. So for to summarize, if you truly want to empower your customer, if you want to provide them a differentiating customer experience, I think the key is in launching new partnerships with complementary companies that can help you improve your own customer experience, and try to find the right partners in which you want to cooperate with. And I think the example of Mastercard and Vegeta from the last FinTech Cappuccino is a really nice one. I think also the example of Mastercard and Mo Technologies is really a rewarding partnership with a lot of potential. So if I were a big bank, I would definitely look for more partnerships instead of developing all kinds of things yourself. So that's a little bit my insight, Lucas.
Wonderful. Thank you so much, Jack. I think it's great as well. Both of the stories that you mentioned, especially with the cooperation with Funding Circle. Funding Circle was it? Yeah.
Funding options.
Okay. Yeah, because there are many of them in the market. But I know that you have launched as part of ING one of the fintech, which was specially dedicated to SME lending in Germany, right? Was it alone as ING or with partnership?
I think in Germany, I don't know that story really. I know from the past that we also had journeys together with Cabbage, a United States-based fintech, who also provided all kinds of lending technology to ING. But I don't know the real example of Germany here. Sorry.
Okay, not a problem. But the one that you mentioned, especially with the cabbage, a couple of insights actually from there, because I know you were highly engaged in the project.
Yeah. Well, what I shared with you involved compliance, legal, and also credit risk management quite early in the journey that you want to create for customers, because you get a lot of pushback from inside, from the company itself, from legal people, compliance, credit risk management people, who say you cannot give the credit approval process to a third party. That should be our core business. So we should build a better customer journey ourselves and not partner with third parties. So I would definitely advise you to involve senior management from the early stages and clearly explain why you want to do this and why this doesn't harm your own business, but why this adds up to your own business from the customer journey perspective and the customer experience perspective.
Wonderful. Thank you so much, Jack. If there are as well, I know, any questions from the audience, please feel free to post them in the directly in the chat. We'll definitely ask them. So I have here already a couple of questions, which I'm going to direct to our speakers. So the first one, this is to both Daniel and Veronica question. Given the situation with the COVID-19, how soon can SME organization, for example, in Mexico or in any other country, can get a small credit, for instance, to pay the payroll?
Vero, do you wanna answer this one?
Yeah, specifically, let's say that in general, when a customer, so when a partner is asking us to help them in this, we are getting into, between, in the case, this is on average, but I would say that in 3 weeks we get, API, we connect with the partner, and we help them with onboarding and everything that is related to a loan. So for the small business, in this case, if it's within the platform, I think from when we start the relation with our partner, in 4 weeks he can get a loan. So, and how we do it is, as mentioned before, so we use our alternative model to really make the decision on the credit score. And then this is a decision that obviously leads to us to instruct our partner to actually make the loan, obviously according to a risk that we previously defined together with the partner.
Okay.
And specifically in Mexico, so we work with Mexico as well, in Colombia, and we have in different countries in Peru as well, Ecuador, and different countries in Latin America. And so more or less the time to market that we have in partnership is like 3 weeks to get ready. And then as soon as we have the data, we are able to issue immediately or to help issuing, to the final user, so the small business.
Yeah, so it's separating two things. One is, as Veronica is saying, to implement the solution, say a bank wanted to implement the solution, it takes around 3 to 4 weeks of effort on implementation. Obviously, you have to take into consideration all the contractual piece as well between the bank and Mo. But then if the question is how fast can they get a loan once they're in the platform, it should be instantly, because it's basically a technology connecting to the financial institution, and they make the decision to disperse the loan to the SME.
Mm-hmm. What's the average loan size and interest rate, or as well the repayment term that you have with this partnership?
So in this, we typically have, so as an average loan for SME, it's around $300. Okay, depends as well on the type of SME, because it's different when we talk about small merchant, and it's different when we talk about driver. But let's put on average between $300. It could be between 100 and 300 depending on the country, and I'm talking about Latin America. In terms of typically, this period we have seen with the COVID, we have seen that we have between 1 and 3 months of grace period, and after that, depending on the decision of the party, it could be the 2%, 2.5% per month. And this is during the COVID. Before, if I would say last year, it was without grace grace period typically, because these are short-term loan that the small business is using as a working capital. So this is the type of loan that we are looking at for small business. So we are actually helping the small business, in a day-to-day business. So it's typically short-term loan. It could be 30 days loan without grace period, and the average of the interest depends on the country, but it could be between 2.3% to 5% per month.
Mm-hmm. Daniel, you want to add anything?
No, that's basically the same as the same partnership. So she's giving us the data right from the source. so it's the same.
Yeah.
Very good. Directly a question to Veronica. For more technologies, what is the current, I mean, you mentioned already a bit the footprint where you operate, but what are the plans of the expansion for other markets, even outside Latin America?
Yeah, so currently we have 18 projects live, and these projects are from USA, Mexico, Dominican Republic, Colombia, Ecuador, and Peru. And we have one of the projects in Myanmar together with the IFC for agricultural finance. So these are the projects that we have right now. We have plans this year to get into Brazil and Argentina as soon as possible. So in the next couple of months, we're going to be in these two countries. And on top of this, we really want to expand because we are a technology company. So our objective is to expand outside, to get into Europe and as well Asia, and to expand our footprint. How fast we will do it. So now for this next, we work really in the short-term perspective and as well long-term. So in the next 2 months, we're going to be in Argentina and Brazil, and then starting, operating outside. We are already looking for opportunities as well in Europe and as well in Asia. And we are getting a lot of, customers that are actually calling us to see if we can help abroad. And we definitely can. And one of the experiences is one in Myanmar that shows our ability to also use our technology outside.
Mm-hmm. We've moved directly to the next topic a bit because there are many interesting questions actually here. I will later on send to both of you, as well to Daniel and as well to Veronica, so we can answer them directly to the people who were asking. But right now, connected a bit more again to COVID-19 outbreak. So in this situation, do you have access to guarantees from certain governments to grant those loans for SMEs?
So I can answer that first. Yeah, so we're seeing different initiatives from different governments across the region. I think we're seeing governments put guarantees to obviously to push for financial institutions to lend to SMEs, and they take on the risk. We have also seen even fast-moving consumer good companies also very interested on lending directly to their customers to help them to continue to buy from them and to run their own business. So yes, the answer is yes, we're seeing that from governments and also from additional players or non-traditional players on the credit space. I don't know, Vero, if you have another.
I mean, and together with what Daniel is saying, is we are currently, as I was mentioning before, doing a couple of projects with government. So one in Mexico and one in Colombia, and they're all focusing on, either the government is giving credit at 0% interest. This is the case we are working with in the case of Mexico. And in the case of Colombia, is actually we are using our platform, the onboarding of the merchants, helping to allocate, let's say, the donations that are coming from, big or small businesses to the government. So what we do in this case, we are also using our platform for the onboarding of merchants. We use the technology, and then we instruct the government to which merchant to give the donations. So it's both cases that Daniel was mentioning. So here, Latin America, we are seeing government helping in different ways, and one it could be credit with 0% interest, but they don't know how to deliver. So that's why Mo enters and helping all the technology side. And on the other side, it could be how to better use the donations to help merchants, small merchants especially, to overcome the crisis. And then there is as well a fourth type of help from the government that Daniel was mentioning, which is like the Fondo Nacional de Garantía. So they actually help lenders to guarantee a percentage of the bad debt.
To involve as well, Jack, a bit more into discussion when we are a bit touching as well the COVID-19 outbreak. Jack, do you have in mind any partnership? It doesn't have to be directly from ING, but that is a good case, or what exactly were the measures taken as an answer to respond and help SMEs in a time of crisis?
Maybe not directly focusing on partnerships, but also in Western Europe, governments have a lot of support for SMEs. But what you see is that the incumbent banks have difficulty in delivering. So there are a lot of government-based lending opportunities, but the system breaks a little bit down within the incumbent banks. They have too much applications to process, and therefore I would really say that companies like Mo Technologies, the real digital companies, can help to execute the vast amount of loan applications. So if you cannot provide them digitally, you have a problem, and that's exactly what you see in these kinds of crises. Maybe there's government-backed money, but if you cannot operationally process it, you have a problem, and that's a little bit the struggle that European banks at this moment have. And that's also the struggle that governments have. A lot of fintechs are claiming that they also want to provide government-backed loans, but they were not allowed to in the beginning. And now you see that the whole discussion is turning, that also fintechs are more equipped and more allowed to provide government-backed loans because they have the capacities to digitally process those applications. So I think this is a big turning point in the lending market where fintechs can actually show that they have solutions in these kinds of crises.
Very good. Now we have, let's say, last 5 minutes left, just to sum up very soon the call at the same time. But before that, I have prepared one topic here, or one thesis only, that I wanted to raise and probably ask to all our speakers. It's connected especially to financial inclusion as a priority. And here it is. So how exactly can partnerships help financial institutions to increase financial inclusion in the SME market? Veronica, Daniel, especially questions to you, but happy to have as well input.
Yes. So as we were mentioning, I think the way that partnerships can help financial institutions lend more to SMEs and also advance on the financial inclusion agenda it's exactly what we were mentioning on how do we bring partners that can bring technology solutions that can enhance the current processes and products from the banking sector to make it more affordable to lend to SMEs. That way you can obviously replace some of the old processes for new ones, and the underwriting process can become more effective and cheaper to complete. So that's my summary.
Veronica, anything else to add?
I think that the idea of partnership, and here I think it's really important to also mention that financial institutions are really willing to have more clients, so they see us in partners as partnership as a good thing to have more clients, and obviously to get, or these clients getting a first credit or a first line of credit line, and if it's a credit card. So I think partnership is really the solution, because today what financial institution has is a traditional model that works very well for the type of clients they had so far. And when we talk about financial inclusion, either the model is different, or you cannot, that financial institution is not able to tackle, you know, really the market that is not included. So I think the partnership is the answer, and I think that we can work very, very well together.
Jack, you want to add anything from your perspective?
Yes, and let me repeat my conclusion. Don't try to rebuild what's already there. So if there are good solutions available in the market to provide small business loans, try to partner with those kinds of solutions that are already there instead of trying to reinvent the wheel. And I think that's really important for big banks, especially in Europe, who are struggling for years to provide small business loans at low operational costs. Well, there's only one solution, I think, and that's when you digitalize the process end to end. So I think partnerships are the way forward.
Very good. And just to have a bit fun, I have prepared a yes/no question to all the speakers, but at the same time to all the participants that would like to be engaged a bit. So let's have it here. Can a traditional banking institution alone, this is important, let's put the emphasis on the word alone, put financial inclusion among priorities while keeping all KPIs high? Daniel, yes, no?
I say yes with the new set of technologies that are emerging. No, in the past where basically banks had to follow the antiquated processes.
Veronica?
Yeah, I would say yes in partnership. No with the current traditional model.
Okay, so the very good. And Jack?
I agree to Veronica.
Very good.
Alone,
so
banks cannot do it alone, I think. Only in partnerships. If you want to be fast and you need to be fast as a bank, then there's only one way forward, I think, and that's to partner.
Yeah, actually, I have prepared a couple more fun questions, but since we are running out of time, let's go straight to the key takeaways. In the meantime, if there are some other as well inputs, especially on the first thesis about financial inclusion from any other participants, please feel free to still write it in the chat. We'll try to probably incorporate for the next meeting that we'll have in 4 weeks period with a spotlight on North American region. But right now, key takeaways from all three of you, so from Veronica, Daniel, and as well from Jack, regarding especially the partnerships and the, let's say, core banking solutions, how the partnerships can help directly there in core banking solutions. And here is a question probably that you can incorporate in your response, Jack. As a conventional bank, what is the best way to approach partnership given the mindset of stakeholders that you have inside the bank? So within your response, please incorporate this question. And to Daniel, if you can incorporate this question, which is after finding a potential partner to solve a specific problem. Sorry, that was a different one. No, anyway, I think I lost the question right now because it's too many of them. So let's get back to key takeaways. Daniel, what would be the key takeaways from today's discussion?
No, my key takeaway is embrace partnerships. Obviously, look for the right partner. Is not that partnerships will help you to solve for everything, but you have to really look for that partner that works with the similar mentality and culture of that of your company, and that both are eager to tackle one common challenge. And that way, when both companies are fully aligned, I think you can accomplish a lot. So continue to embrace and welcome partnerships to your strategy.
Veronica?
Yeah, and on top of what Daniel is saying, I would say in a fintech perspective, and this is like a takeaway, let's say, for the financial institution, is really to use the complementary assets that a fintech can bring to the table, and let's just use it like in a complementary way, because in reality what we are looking is the same objective, and it's just working together to make the processes better, faster, and all digital.
Wonderful, thank you so much. And right now to Jack, I know Jack already mentioned he's one of the key takeaway. Don't reinvent the wheel when it's already there. So just try to find a solution. But connected to that, a question: what is the best way to approach partnership given the mindset inside the traditional organization?
Well, don't try to look for the no, why you shouldn't do a partnership, because you will find plenty of no's why you should not do it. Try to look for the yes, why should we do it in a partnership, and just start, just do it. Just start conversations with a partner and start building and learn. So start small, but just do it.
Wonderful. So that's been Jake Demois from former area lead digital transformation from ING. Veronica Crisafulli, who is a Chief Commercial Officer and co-founder of Most Technologies, and Daniel Acosta, Vice President Commercial Products, Latin America and Caribbean. Thank you so much for joining us. To all our speakers, our guests. I think you're still open to some additional conversation with our participants. So we'll try to send you the questions that we received, and please get in touch with them. I guess they will be really happy. So for all the other participants, please stay tuned for our third SME Banking Coffee, which we will have around the end of May. I think to be precise, on Tuesday, 26th of May, again 2 p.m. Central European time, which then you can basically find your time zone. And we'll be giving a spotlight during the third one on the North American region. So we'll have a speaker directly from the US presenting one of the case and one of the partnership story with Mastercard with one of the fintech or one of the institutions in US market. So that's it from my side on behalf of EFMA. Once again, thank you to all of you, the participants, and thanks to all the speakers, because they were the ones to produce a wonderful session today.
Thank you very much.
Thank you.
Thank you. Thanks a lot.
Thank you.
Bye. Bye.
Have a great week and stay safe.
Yeah.
Same to you. Thank you.
Ciao, ciao.